Hello everybody, welcome back to ClearSurf Financial Education. So today I wanted to start off talking about the market, and also what I'm seeing here is the cycles that are moving. So what's happening right now, if you haven't paid attention much in the last week, it is moving fast. So the last video I did, which I'll leave links to, was talking about how Square, also QS, PayPal, these stocks were just moving up like every single week for the last year. And Zoom was another one. That was basically, I think Square was a $35 stock that went up and touched 280 just in the last year. So that is one heck of a run, but rates have been super cheap. So what's happening now, two things are going on. Interest rates are starting to rise. So if you watch the 10-year treasury, that has gone from the beginning of the year 1.15 to this week it touched 1.6. And the market started to do some rolling over in the last week or so. If you watched it, the Nasdaq in particular is getting hit really hard. So what's happening now is some people are calling this the opening trade. So in other words, we know the economy is starting to open up as more and more states are starting to drop their restrictions on mask wearing because the vaccines are getting distributed. What you're seeing is economies are starting to open up. Well, where you're seeing that, the biggest impact has been two of the worst performers last year, which were financials and energy. Those two are the biggest winners this year, and the reason is, as rates go up, that's better for the banks. So I looked at Citi, Bank of America, Chase, and Capital One was the biggest shocker. That thing has really moved the fastest and the farthest. So as rates go up, that's good for banks. As oil's been rising ever since the election, I just looked at a chart of the WT, crude oil basically. So I'm looking right now, October 10th, crude oil was $35 a barrel. Then we have right about the election, it was as low as 37. So 35 to 37, today it sits at 65. So if you've noticed that your cost of gas is going up at the pump, that's because oil is going up a lot. That has two things going on now. You have the economy that's starting to lift and more people are getting out and traveling, which was seen, but you also have Biden doing the executive orders and shutting down the pipeline and shutting down drilling on national lands. So as there's less supply and demand rises, you have a double-edged sword. You're getting cut on both sides right now. You got an increasing demand with supply being restricted. Is now we're more dependent on the Middle East, which is exactly what we did not do for the last 4 years. Don't want to be political, that's just the facts. I'm pointing out the facts. Oil's gone from 35 to 65. Now, what does that mean, rising rates? So what else is happening is stocks have been rotating. Your FANG stocks, Apple, Google, Facebook, Amazon, Netflix, they have just been up just a meteorite. They're just shooting, actually opposite meteorite. Meteorites go down. This is just shooting up. So what's been going on is as interest rates rise, all this free money just gets a little bit more absorbed. If rates go up, that means all these companies that are just depending on free money to go out there and buy and do mergers and acquisitions and anything they want to do. Well, as that gets more expensive, then you're going to see those stocks come down. And that is exactly what we've seen. I mentioned in that other video, Square was one that I had been watching. And so that stock, just in the last month, I'm just going to pull up a chart here. Just in the last month, it was at 280 on February 19th. So it went from 280, February 19th, 6 days later, 223. Today it's at 212. So you're seeing companies, and that's not the only one. Lemonade was another one that is like an online insurance company. That's LMND. That is an insurance company, and we pulled that one up. That's one I had not talked a whole lot about, but it had been another favorite with Kathy Wood, who's one of the biggest hedge fund persons out there. People follow. Her return was up 100% in the last year. And so she was doing all the stocks. Number one holding was Tesla. Square was the number two, and Roku. All three of those stocks have come down tremendously. I think Tesla, I'll pull that chart up in a minute. Tesla was over $900, and I saw yesterday it was below $600. So this lost 30% of its value in a matter of a couple of weeks. So as interest rates have been going up, these stocks have been paying for it. So let me go back to Lemonade, which is that online insurance company, which is interesting. So that was on February 12th, high of 168. Today it's at 90. So you're talking about losing half of its value. Half of its value in 3 weeks. These are just devastating move. So for funds like Kathy Woods, who's been one of the darlings, one of the favorite people out there, of like the people on Reddit and the people that are trying to make a quick buck and just following whatever trade stock she was buying, they were buying. Now she came out this week and said that she still believes in Tesla and she's buying on the dip. And I'm going to pull that one up now. That one is just simply a play on everything going towards electric vehicles. And I have read some newsletters. I get a newsletter from a very well-known billionaire, and he still claims that we are going to go on electric vehicles in the next 2 to 3 years. And now you're starting to see Ford and GM talking about it. So another thing I want you to look at is these Chinese electric vehicle stocks. So they are like NIO is one of them. It's one of the biggest traders by the Reddit followers. That stock was $5 like a year and a half ago, now trading for like 55. So that stock and two others have gotten permission to get listed on the Hong Kong Stock Exchange. And I think I read somewhere they plan on raising like $5 billion. So this whole push into electric vehicles is very much alive. But Tesla's been out in front for so long. That stock is just, I'm just gonna pull up a 1-year chart. It is just something that led Kathy Wood's fund for such dramatic moves. It was there we go. It was $100 in April. April of last year, $100, and it looks like it peaked out somewhere around 900. So 100 to 900, and that was only less than a year. We're talking like 7 months, and that was her number one holding. So her fund looked fantastic, but as everything else, if you ever traded or watched the market close enough back in the late dot-com bubble, there was a fund called, I forget the names of www.com fund, a World Wide Web fund, anything that was chasing those high flyers that made no money. Now Tesla's in the right direction. I'm just saying, when you're taking on that much risk and you're buying these high flyers that just seem to go up and up and up, eventually they get reined in. And you're gonna start seeing competition, not just from Ford and Chevy, but also Chinese competition. So that was pretty interesting to see, but just really huge carnage. So what's working on the other side now? Interesting enough, obviously I mentioned interest rates are going up, so banks have been doing really well. I'm gonna pull up Bank of America. That was one of the better performers this year. Let me just take a look at a year to date. I think is all the further I'm gonna have to go back and look at. Let's see here. So yeah, beginning of February it was a $30 stock and now it's at 36. So that's a 20% move as that 10-year treasury has moved up from 1.15 to 1.6. So rates are up. That's good news for banks. Banks can charge more, and so that's positive for banks. And then you look at, I think Chevron, it was Warren Buffett, I think, who took a major position in Chevron. That's another one that, look at a year-to-date number with obviously oil going from $35 to $65. That's a big beneficiary of those folks. So again, going back to the beginning of February, an $88 stock is now trading for $110. So you can kind of see what's happening. All the high flyers, and you could just throw a dart at a high flyer, it seemed like that was going up, but they didn't go up in a straight line. They went up, pulled back, but eventually they kept getting pushed higher. Every dip was bought. And now I'm starting to watch last week and again this week, every advance gets pushed back. And it's no more prevalent than the largest company in the world, which is Apple. I've had my eye on this because it's something that we definitely wanted to get invested in, because I still think they're going to have continued growth. They always find a way to develop, but this is a stock that went from $60 back in April, and it peaked out recently at $145. So 60 to 145, but Warren Buffett and Bill Gates both had shown at the end of the fourth quarter last year, they started liquidating that position. They made a ton of money and liquidated. So now we've gone from 145 to yesterday down to 116. So it dropped 30 bucks. And looking at the chart, I don't know if it's quite done yet, to be honest with you. There's a big gap yet that could fill down to like 92. I would be really, really interested if it gets down close to 90, because then you're talking about taking back almost half the gains that we saw in the last year. And I think that would probably draw in a lot more interest. Again, I'm not going to step into that until I start seeing the volume pick up. Whenever Apple was buying back shares, Warren Buffett was buying it, and Berkshire Hathaway and Bill Gates, the volume was up every day. It was in the top 2, 3 of volume purchases. And that's when you want to step in front of it. When the volume is up and the stock's going up, that means large institutions are buying it. And that's what you want to see. Right now, you're seeing that with the banks and the energy sector. So I'm just saying, interesting rotation. And you can pretty much watch the 10-year to see how this is going to play out. And so if you see that 10-year, if that 10-year keeps coming down, the banks will pull back and stocks might get favored again. So Apple and Microsoft might come back into favor. Microsoft is the other one, to be honest with you. Out of all the FANG stocks, Microsoft has held up the best. It has gone down the least during this time of interest rates rising. I can go back to January 15th. It was a $212 stock. It peaked at $245, and just on Friday it pulled back. It was back 20 bucks. So just give me a little bit of insight there. If you want to play on the conservative side, to me right now, Microsoft looks better than Apple. And honestly, I mentioned this in the prior video that, for myself, we used to buy software for the computer one time and didn't replace it if the computer died. And now we're on a subscription-based model, which is genius. So Apple and Microsoft are getting more people into the subscription base with the cloud, with Microsoft, and also with Apple. But Microsoft, now we're paying an annual fee of $99. Yes, you can share it with a number of family members, but you're still on the hook once a year to purchase something that's $100 instead of a one-time purchase of $150. So good for them, good for Microsoft Business. So how I'm going to get my money back for the membership, I'm going to be looking to buy probably Microsoft before Apple whenever I feel like this bottom has gone down and the volumes start picking back up. So that's it for now. I'll leave it there. And so just pay attention to that 10-year and look at oil. Those are two things right now driving this market. And also that stimulus bill was just signed, the $1.9 trillion that they signed. So that might give the market a short-term boost. There's going to be another nearly $2 trillion in the market sloshing around, looking for a home. And oh, by the way, yesterday I saw a survey that said something like, I don't know, it was almost like 40% of the population planned on investing their stimulus check, the $1,400 check is coming out soon, in the stock market. And I'm not joking. It was like 38 or 42%, somewhere around 40% were going to invest at least half that money in the market. That tells you all you need to know. All right, folks, take care. Thanks. See you next time.